Okay, we're recording this video on Sunday, the 26th of January, 2020. It's just gone 1 p.m. Chicago time. Do hope you are doing well. So that was quite a day on Friday. Big down day. Hadn't had that kind of volume or range for quite a while. And I do hope everybody took some chips off the table earlier on in the week. The previous video I've done last weekend talked about how we had a blow-off move happening in the NASDAQ, where we had a whole bunch of blue professional bars, an exhaustion buy into that kind of local top, and that just showed the professionals were taking profits and handing off to the amateurs who are getting into the market kind of way too late. But anyway, so what we are seeing develop is a run to the safe havens. So for a while we'll have a phase change where the market just starts to run into safer assets and away for the risky assets. And you can start to see that developing in the charts. So I'm going to show you that with a particular emphasis on US bonds. I can show you what I've got on the charts there. So this is a little bit of a mess, but on a big screen it looks perfectly good, and it allows me to look at all of the major FX contracts at once. Dollar index here, Japanese yen and Bitcoin. Then we've got the euro, British pound, and Swiss franc, so the European kind of FX currencies. And then the Aussie dollar, Canadian dollar, and Mexican peso. And these are more representative of commodity markets and emerging markets and more kind of high global growth type currencies. And we can see that, with a risk-off move and a run to the safe havens, we can see the dollar index is starting to strengthen. Talked about that last weekend with that break that we had, and we've continued to break above resistance. I'm expecting this to continue higher. We've got the Japanese yen also starting to strengthen a little bit, and this is unwinding the carry trade. So we've backed into 91 level a few times here, tested those lows and had a couple of days of strength. The charts aren't showing breaking above resistances yet, but let's see kind of where this develops next. But we've certainly had a little bit of a 91 level tested and bounced off that. Swiss franc, I don't think the Swiss franc is as representative as a kind of safe haven currency anymore, just because of the manipulation that's going on by the Swiss central bank is kind of extreme. But you can see that the last couple of months we had strength, so I'd expect that to kind of continue. So there we go. That's dollar index, Japanese yen, and the Swiss franc is where you would see a run to the safe havens. Aussie dollar, interesting. I talked about the euro last weekend. Aussie dollar weakened on Friday, and we broke back down below support on the Aussie dollar. And again, that's kind of representative of a risk-off move, and people are kind of getting out of more risky currency and risky assets. So continuation of the downtrend in the Aussie dollar, I would expect there. So that's looking from an FX forex kind of perspective. And then we can look at all of the major asset classes, the global macro kind of asset classes. So we've got the equities market here with the EEM, which is an ETF for all of the emerging markets. Then we've got gold down here, US bonds, high yield bonds, that's junk bonds going on here, IYR, which is the real estate market, and then the commodities. We've got crude, copper, and DBA, which is all of the ag commodities. And we can see that crude's kind of coming off. We've broken into a downtrend continuation of underneath resistance on this highest time frame and weakness below support there on crude. Same thing happening in copper. Copper, we've reached exhaustion by bearish divergence. Not turned into a downtrend yet, but we've had that sell-off has been pretty extreme over this last week in copper. DBA is the other one. We've had resistance on the highest time frame kind of come in, and we've not been able to kind of breach these levels, and that's starting to roll over. That, I think, is because of the strength in the dollar index, and so the commodity markets will come off because they're kind of inverse correlated with the strength in the dollar index. But the one that I really want to point out is the US bonds market here. So let's just zero in on this with the usual setup here. We've got on the right-hand side the price-based indicator, beta sine wave, showing me the trends and cycles, support and resistance lines here. And below the price bars, we've got the fast and slow lines of beta sine wave showing the intermediate and the highest time frames and where we're likely to get cyclical crosses and resistance and support levels. And then on the left-hand side, we've got better momentum and better pro-am. Better momentum is measuring volume momentum, and better pro-am is showing average trade size and where the professionals and amateurs are active. So the last couple of days, we've broken back above resistance on US bonds. Exactly the same chart. You could look at TY for the 10-year instead of the 30-year, and showing exactly the same pattern here. So we've got support on the intermediate time frame. We had some weakness, but we weren't able to break below this level here. The intermediate support has held, and now we've broken back up above resistance on the lowest time frame into some strength going on here. And because we are above the resistance on the highest time frame, this very solid line here, this has got to run pullback to end of trend on the highest time frame. So at some point, these thick lines here will wrap around, they'll move to zero, wrap around, and that'll give us support on the highest time frame and reach back up to break to new highs. And we definitely had some profit taking going on by the professionals up here at these highs, and amateurs getting short at 156 here, kind of leading the way on the way down. I think they've been wrong-footed. But I don't think this is all over on the upside. We've had an exhaustion buy and a bearish divergence and, profit-taking by the professionals here. But I think it'll go to extremes. And I'm kind of counter one of my heroes, Martin Armstrong, on this, because he's talking about how rates will start to rise this year. But I just don't think it's going to happen quite yet. And here's one of the reasons for that. So you can look at bonds, the rates for all of the bonds on a chart using better sine wave, showing kind of price cycles here. And this is the 5, 10, and 30-year interest rates. So that's a $ FVX.X, and then TNX.X, and then TYX.X. So all of these are the interest rates. That's symbols that TradeStation has. And I like to look at these just on the big picture to see what's going on. And you can see they've got exactly the same patterns happening on all three charts, but at different levels. So the 5-year is about 1.5% at the moment. The 10-year is 1.68, and the 30-year is at 2.113. But what we're doing at the moment is we're breaking back down. We've got resistance on the intermediate time frame behind each of these moves down, and we've got weakness going on. So let's just wrap this up. So we maxed out with this uptrend move, pull back to end of trend into these highs, resistance on the highest level, and we're coming down. We've found support, but we've bounced into resistance, and we're coming back down because of these white bars below support. And so we're going to be testing these lows, and we still haven't made a pullback to end of trend on the highest time frame. So at some point these lines, the thick lines, will kind of come up to 100, cross, and kind of turn over. So that's the 5-year. The 10-year, same kind of picture, resistance on the intermediate time frame. The little bit of strength that we've had is now turning into weakness. And then the 30-year, same thing. A little bit of strength that we've had with these red bars is now turning into weakness. And because we're below this highest time frame, we need to kind of go test those lows. So that's why I think we're going to get a continuation of the strength in bonds. And I don't think this has been enough of a move to reverse bonds. So I think we're going to have a look at the highs with a kind of a run to the safe havens for the time being. How to play it? Well, so people don't like me kind of mentioning leveraged ETFs, particularly triple leveraged ETFs, because they are dangerous, risky kind of moves. But if you were interested in playing some strength in the bond market, TMF is one of the vehicles that you could do that through. So quickly moving on, let us talk about Bitcoin, because a couple of videos along I talked about the Bitcoin market, and we had bottomed with this pattern. BTC USD is the contract I like to look at on TradeStation, and we bottomed with cyclical patterns here. Pull back to end of trend on the intermediate time frame, pull back to end of trend on this left shoulder here, inverted head and shoulders move on the lowest time frame, and we'd started to break into strength above this 8,045 type level, and we had a really nice little getaway move to 9,000, but we've kind of come back. What's interesting is we're starting to break. I don't know why these moves tend to happen on the weekend, but they do. So Bitcoin on a Sunday seems to be very active, And for me, the confirmation of this uptrend and breaking above two resistance levels, the intermediate and the lowest time frame, would be really significant. So the number to look for is 9,000 and a bit. We get above there, we're breaking into a serious uptrend. So that'll be interesting. Now, this chart doesn't seem to pick up the weekend activity. The chart that does seem to pick up the weekend activity is this one, which is the real-time index, so BRTI, dollar BRTI on TradeStation. And I look at a 60-minute chart of here. So it's different than a daily chart, but here's the breakout kind of strength that we had a couple of weekends ago. We've come into this weakness, all these white bars going on here. It is jaggedy because this is a 60-minute chart. I like looking at these on a tick bar basis, but we don't have that most recent data. And so on Sunday, today, we just broke above resistance on the lowest time frame at 8,005, and this thing has got a little bit of a push. The number to be looking at is 9,000. We start to break through 9,000, and that means that on the Bitcoin chart, on a daily chart, we're starting a proper uptrend on Bitcoin. So just watch out for that, and I'll be looking for that. Today's activity, Monday's activity, to see if we get some serious money kind of joining in. So anyway, we're going to be watching over the next days and weeks, I think, for a little bit of a risk-off move, a run to the safe havens, and I'm particularly interested in what's going to happen to rates and US bonds.